West Africa's 2012-2013 cocoa season formally closed at the end of September with satisfactory output across the region. But after a shaky start last October, cocoa deliveries in main producers steadily gathered pace throughout the season before slowing down under the impact of a dry spell between June and August. And right now we have joining us from London, Edward George, Head of Soft Commodities Research at Ecobank, for more on the West Africa cocoa sector. Thank you so much, Edward, for joining us. So a bit of a tale of, if you like, two halves. The start was, the dynamics at the start were very different from dynamics in the middle and towards the end of the season. So talk us through the key takeaways for you. Clearly, weather has been a big issue over this last 12 months.
Well, I think what's really been shown by the last season we've just had is that weather is the most important overriding factor for West Africa's cocoa sector. Just as we're experiencing now, at the beginning of last season in October 2012, there were quite a few jitters about the cocoa season because deliveries were well below the previous season when the season started. But they picked up very fast. In fact, by around July, Côte d'Ivoire was nearly 7 or 8% ahead of the previous season. But then there was a sudden slowdown because of this dry spell you mentioned. And that's why the mid-crop really tailed off towards the end. Ultimately, we think Côte d'Ivoire came in about 2% below last year and Ghana about 5%.
And the story in Nigeria, we're hearing of a recovery after the impact of the floods about a year ago. We're beginning to see a recovery there. And I want to get your thoughts about the impact of the agricultural reforms on Nigeria's cocoa sector in particular.
Yes, I think what is impressive about Nigeria is to see that there has been a steady increase and improvement in production over the last 3 or 4 seasons. Nigeria is certainly on target to reach 250,000 tons. I know there are plans to get up to over 350,000 tons, but everything has to be done stage by stage. The government has given very strong support to the sector, particularly in the distribution of new hybrid varieties, which are high yielding, require less water, which are resistant to certain pests. So I think we're really seeing the sector on the rise there. And I think it is very much eclipsing the other important producer in the region, which is Cameroon, which seems to be stuck in a long-term decline.
Right. Of course, you just mentioned Cameroon stuck in a decline, and so if we look at the broader industry globally, there is a sense that prices are likely to even move higher. Your thoughts about the dynamics of demand and supply going forward, looking at the broader industry globally?
Well, I think it's clear that there is going to be some kind of deficit this season, the season that's just finished, and the new season 2013-14, there are expectations of a global deficit of over 100,000 tons. I mean, I've seen some estimates up to 250,000 tons. And what this means in real terms is that we're going to see prices going up. We've already seen that Côte d'Ivoire has pre-sold over 2/3 of its 2013-14 crop, which means there is a real risk that at certain stages during the season, just before Halloween, just before Christmas, just before Valentine's, when chocolate consumption rises, that buyers will come onto the market and find that a lot of the supplies are not available. And so because of this, we've seen the prices edging up slowly. Ultimately, prices are still 5 to 10% below the levels they've been over the last 5 years on average. So there's still plenty more room to go.
All right. Okay, so plenty more room to go in terms of prices. But let's talk a bit about value adding in the sector, particularly in West Africa. We do know that a lot of this is more or less the raw cocoa, if you like, very unprocessed cocoa being shipped out of the region. But I think a lot of people would like to see a lot more value added, some processing going on in the region. Can you just talk us through what's going on in that space?
Yes, well, at the moment, Côte d'Ivoire is the largest of the processors in the region. In fact, the amount it processes compares with other major processing hubs, for example, the Netherlands and Europe. The problem is Côte d'Ivoire only processes around 30% of the beans it produces. And generally, across West Africa, the processing amount is between 20 and 25%. But the region actually produces 70% of the world's raw cocoa beans. So there is a real need to extract more value from the value chain. All of the different sectors in West Africa are investing investing heavily. The governments have promised support to try and get more processing activity working. The problem is, in somewhere like Cote d'Ivoire, there is a reform which is currently underway, which is very much focused on the farmers and trying to see that they get a fairer share of the prices. In previous seasons, they had an indicative price which was routinely flouted at the farm gate. Farmers often got as little as 40% of the price. The season we've just had, farmers came in with around 62% of the international price, but it's really cut the margins of the local processors. And so currently, the sector in West Africa is actually looking at stagnation this season, because simply the margins have been squeezed so tight, transport costs have increased, and I think a lot of processors are starting to look towards Southeast Asia to increase their production capacity and not to West Africa.
Right, so it doesn't sound like a pretty picture right now. I want to hear about, in this context, investments to increase production, maybe increase the size of plantations, stuff like that. Are we seeing that happening at all? Or do you get a sense that, like you did mention, there is some stagnation right now and this is likely to be the case over the medium term?
Well, I think what we're seeing is a structural transformation of the involvement of many of the cocoa players. A lot of the big trading houses over the last 5 to 10 years have become what they call vertically integrated supply chain managers. Effectively, they're not just trading the beans, they're getting involved in origination, they're getting involved in cooperatives, buying, processing. And so I think this process will continue, and I certainly haven't seen any sign of efforts to increase certification, transparency, and improve farming practices reducing. A lot of companies are involved in that. But I think the reality is that a lot of the processors have basically taken their foot off the gas. They're waiting to see if they can come up with an acceptable pricing system from the government. And certainly in the case of Cote d'Ivoire, negotiations are ongoing. But I think the reality is it has to be accepted that every processing sector in the world has some form of subsidy. It could be tax breaks, it could be price fixes, it could be rebates, but ultimately there has to be a subsidy, and that is what is currently being discussed. If the Ivorian government can get the balance just right, then I think we will see a lot more investment in Cote d'Ivoire and across West Africa in processing capacity.
Right. I just wanted to finish with that point. Where you think we're likely to see the most investments? Clearly, Cote d'Ivoire seems to be leading the way right now. You mentioned that Nigeria seems to be on the rise. In terms of the opportunities for investors who would like to pitch their tent, particularly in processing, where do you think is the best market, looking across West Africa right now?
Well, I think one of the biggest issues actually facing West Africa is investment in research and development. One of the issues facing West Africa's cocoa sector is that it is totally dependent on the tastes of Europeans. All of the cocoa products which are being produced are going to European markets for European tastes. There needs to be R&D into products which are for African tastes, African markets. It has been said before that you can't sell chocolate in tropical countries. Well, it doesn't have to be chocolate. It could be something made from chocolate, could be a drink, some kind of food supplement, cakes. It's up to local companies to invest. And if there is then that local demand for cocoa, there is a lot more future for the sector. But without any doubt, I think one of the richest areas for investment is in the logistics. Warehousing is still very much inadequate, particularly in countries like Nigeria and some of the emerging processors, Sierra Leone and Liberia. I think that's really where there could be a lot of added value and a huge amount of potential. And of course, the added bonus is if you have decent warehouses, you have the possibility of warehouse financing. So you can unlock the financing potential of the sector too.
Right. I think you've said quite a bit for Nigerian authorities, particularly to think about, particularly with respect to R&D and warehousing. Edward, let's leave it there. Thank you very much, Edward George from EcoBank, talking us through West Africa's cocoa sector.